Happy Thursday, everyone. Going into Friday, it was actually it's one of those weird sessions. I'm going to call it the market feels creepy. Does that even sound right up here? I don't even know if that sounds right, but that's kind of what the market feels like to me. It feels creepy up here. Very, very odd, but that is what it is. The Nasdaq was down 0.91% today on volume, lower than the day before. So while that looks bullish, my momentum indicators are turning lower again, especially on MACD. TSV looks like it wants to go below the moving average line, so we'll see if that holds. But bottom line is, we had low volume on the NASDAQ. I had low volume in the QQQs. I had low volume in everything except for QID. That was the only one that I saw that had the volume that made me go, oh, okay, maybe something's accumulating. Even TQQ, even though it's above average, it's lower than the day before. So there isn't really a whole lot that I want to do on this move. A move above the 50-day moving average, and obviously 5% of my hedge will be initiated again in SQQQ, and another 5% in SRTY whenever the Russell 2000 decides that it wants to go below 50-day moving average. But here it is above it with volumes well below average on today's sell-off. So it's really, it's kind of hard to go ahead and get too negative on today's down day because volume was so low. And you have the New York Stock Exchange, S&P 500, and Dow Jones Industrial Average is all at, flirting around with all-time highs. So it's kind of hard. The only thing that I've noticed lately, though, is the Dow Jones Industrial Average. You don't see it too often, and when you do see it, it's never good, really, is red bop. Red bop is showing up in this index, and you normally don't get red bop in this index and then see prices rise. I mean, you can go back to whenever I think these charts go back to the 1920s in Telechart, and you're not going to see red bop on this index and too much more of a rise. So, I mean, we've got to be near a turning point. S&P 500 also had red bop the day before, so something else to keep in mind. And then on top of that, I happen to notice today, I mean, don't forget, we're coming up on May. This is the month of April. Next month is May. You know the old Wall Street axiom, sell in May and go away. So, I mean, we even have seasonality coming up against us here. And then did you see what happened to Ameritrade and E-Trade Financial Group today? I don't know if that's because of the Michael Lewis hedge fund or high frequency trader investigation that's going on right now. But I tell you what, that was some ugly reversals. And I think when brokerage firms are acting like that, that's not good. And then you take that with Goldman Sachs that might be trying to make a long-term head and shoulders pattern. Morgan Stanley, which would possibly trying to make a head and shoulders pattern. JP Morgan, not there yet, but this could be a head that it's trying to make if we do start selling off. And you kind of got some reasons to be a little bit nervous on that end. On top of that, momentum stocks ISR looks like it wants to reverse. You can watch that one for an intraday breakdown, as that should bank nicely if the market decides to plunge. And then Plug is wedging higher, so Plug, BLDP, all of these are going to be on watch for breakdowns very shortly. I'd watch those intraday for actionable breakdown short sell setups. Today, before we actually get into some more negativeness, let me quickly go over our only two sells. We don't have any new longs. FLDM's a 25% sell because it's closing below the 50-day moving average on above average volume. And CTS has failed immediately, closing below the low day of the signal date 2 days ago. So it is completely gone, especially with higher volume and red bop. So that's done. But on top of that today, there were some pretty other noticeable reversals. Facebook has reversed at the 50-day moving average on above average volume. APOL continued to sell off even though it's not that much from the reversal yesterday. Under Armour reversing, trying to break out, reverse back in, tried to break out again yesterday, and this time a heavier volume reversal. YY Incorporated looks like it wants to reverse its breakout with VIPS, which would not be good. You can already see Yelp is already selling off on above average volume, and WUBA is a more recent, I guess you could say, momentum IPO, and it's really not going anywhere, trying to reverse. It's actually reversing its breakout from 2 days ago. Not good at all. So, the market is what it is. There's other IPOs that reverse. RGDO, TWOU was two recent momentums. They didn't hold their breakouts. EBIO is another IPO stock that 2 days or 3 days ago looked like it wanted to move higher. Now it's reversing its breakout attempt. So, it's not healthy out there, but it isn't ugly yet. So the main thing is stay neutral and wait for the market to break one way or the other. Like I said, everything is lined up against the market, so even if the market does move higher here, I don't think there's very much upside or huge returns possible following the lows from 2008. 6 years into a uptrend without a 20% pullback on a closing basis. Not the exact best time to invest.